Hello everyone, and welcome to a new episode of the Learn and Trade with Popeye. Today I want to make a little bit a different video. Let's say we will be a little bit less technical, but more logical for something that I think is really important, because I very often receive this question and I very often see a lot of confusion on this topic. I would like to speak on how to build a trading system. So what are the fundamental components of a trading system, and what each trader should have as a foundation of their trading system. So what are the components that are mandatory to be present as a rules, as a concept, as a logic behind a strong trading system. As always, a big thanks to Bluefin for sponsoring the video. Make sure to trade with me on Bluefin. You will find the referral link on the description below. You will enjoy a 20% discount on trading fees, and you will be eligible for the very cool campaign we run with the team. Bluefin is a non-KYC exchange with a lot of liquidity and a very cool interface. So you just need an email address to register and to join. No need to provide your personal information. So do not wait further. Just click on the link on the description below and join Bluefin. Also make sure to drop a comment and a like if you enjoyed this video, and make sure you are subscribed to the channel. But without further ado, let's try to dig deeper on a trading system. So many times I receive question, I receive comment with people saying, I don't know how to build a system, I don't know which indicator to use, I don't know where to start, and how to make sure that I'm able to develop a system or a strategy, or let's say my comprehensive set of tools and logic and reason that will allow me to follow a system, or again a strategy. So I want to map together what are the components of a trading system or a trading strategy. I will use some example of what are my strategy in my system, and you will find many videos that explain all this topic in details. But the point of this video is not for you to create clone of traders that use my system, but is to make sure that you have a checklist that will allow yourself to develop your system, your strategy, and to make sure that you can tick all these boxes on this checklist, and you are sure that your trading system is following and touching all the important aspects. Then I do not believe that my system is better than others. I do not believe that my system is perfect. I just want to tell you and help you to define what are the mandatory concept or topic that each trading system should have. Then everybody's free to fill all these chapter with their style, with their way, and so on. But it's important that each system has all these topic. You will see often that when I analyze chart, especially in the market weather bulletin, I mentally, for me is automatically, follow this system, this approach, this topic. I follow automatically when I check a chart. I automatically, naturally, subconsciously follow and tick all these boxes. So the first very important part that each trading system should have is the ability to judge the context where the chart is, where the chart has been, and where potentially the chart will go. So this, in simple and technical terms, is a way to define the bias on your chart. So again, to keep it simple and not too practical, this is the Bitcoin 12-hour chart. So a system that allow you to understand the context is a system that allow you at least to define the difference, objectively define the difference within, for example, a trend, that is what we are having here in this high time frame, that is clearly an uptrend, and allow you also to define that this is a range, for example. or it allows you to define that this price is fractal, that allow you that this was a downtrend, and this is a system, a bias that allow you to define that this downtrend somewhere here was broken. So it allows you to decide and to judge the chart, give you a context, and thanks to the objective evaluation of the past price action, allows you, by understanding the context, to give you a bias. The bias is market is potentially uptrending, my bias is to go long. Market is potentially going sideways, my bias is to short resistance and long support. Market has been broken a downtrend bullishly here, so my bias is to try to catch a trend reversal, and after the downtrend to try to long the trend reversal. Bias can be 1,000. I gave you some example of what I do. Then the bias can be based on liquidity, based on much deeper concept. But the concept that I want to pass you is that the very first foundation and the very first chapter of a trading system is that this system should give you an objective way to judge the context. By judging the context, you will be able to define your bias. So before doing anything in a chart, you have to, for me, is even better if it's a naked chart, so you do not have any information. If I start to do like this in a chart and you open it, you already will have some bias, okay? If I start to do stuff like this on this chart, you will have a different read of this chart than when the chart is naked. So I always like to start with a naked chart and to judge the context and form a bias just looking at the price action. So the very first important topic, clause, or part of any trading system or strategy is something that should be objectively giving you a bias, and then potentially also something that will allow you to adapt and change your bias in case something changes. The second important part of a trading system should be, again, an objective and systematic, let's say, way of defining level of interest. So level of interest, again, can be thousands. There is, for me, not a better one or a worse one. You should find something that works, but should be a way that allow you to define levels. What are levels? Support and resistance level, for example. Could be demand and supply. I don't know, this is a demand, no, this is not technical. You will find all videos about demand, supply, mapping levels, everything you will find for my style, but this is not the point. To find a way to mark a supply, way to mark demand, way of marking support and resistance, or way to simply mark the market structure, what we said before. Now this is a bullish market structure, or way to define, this should be very objective, the market structure. So since you will be able to mark this market structure here, you will also be able to know where the market structure is finally broken. Now I'm just charting for giving very simple examples. So this topic is also very important because by allowing you to give you an objective way to map level of interest, you will know that there are level of interest that translates to level where you are interested on doing business, and logically, consequentially, will also tell you the level where you don't want to make business. So there is a time to go long, there is a time to go short, but there is also a time in trading that you have to go fishing. So by mapping level of interest, you will know when you want to get into action and when you simply want to go fishing or sailing or whatever you like to do in life. There are many ways. An example, for example, in the ranges, I use fixed or visible volume profile. Again, just for the sake of the video, I know that by using this fixed volume profile, I know where volume area high is, where value area low is, I know where the point of control is, and I know that potential in a range is always better to short value area high, is always better to long value area low, and I know that the point of control is generally a level of choppiness. I also know that if this range is broken to the above, I know where I would like to long a potential retest for a trend continuation. So again, second super important part of any trading system is to have an objective way of creating and mapping level of interest where you are interested to do business, and consequentially also gives you level where you are not interested to do business. Again, I told you more or less what are mine. You will find many videos here in the Learn and Trade series about how I map levels, what are supply and demand, the Fibonacci, all that kind of stuff, but you have to find yours. There is people that use liquidity with the liquidation heat map, there is people that use many other tools. Fine, as long as an objective way of doing it, so you are not all the time using your emotion to map level, and is a way that you can track over time, you can journal, and you can report it. Third is a way to determine market dynamics. I don't know a simple way to a simple name to give to this concept, but let's say is a way for you to determine when these level of interest are visited and you are matching a level of interest according to your bias, what are the market dynamics that you want to see happening at that level in order to execute or not execute a trade. It can be a momentum indicator like RSI, divergency, it can be CVD, it can be OBV, it can be spot versus perps, it can be a lot of stuff. It can be pure price action with swing failure pattern or whatever, but you should develop some sort of understanding of market dynamics through or without indicators that allow you to tell you that when a certain level is visited, you want to see a certain, potentially you want to see a certain dynamics in order to enter a trade. It can also be a very low time frame observation of the price action, so it can be a low time frame change in structure. It can be, again, purely on market dynamics, for example, a sweep. So you know that this level was a order block, using really live example. You know that potentially this range was ranging somewhere here, so you know that whenever you see some sweep or a triple bottom or whatever you want to see, none of my business, you know that this market dynamics in a level of interest, in a bias that you have, for example here, that this is still a bullish trend, so somehow you want to long somewhere here, this it gives you a level of interest, this is giving a bias, then there are some dynamics here. It could also be a bullish divergence. I'm not sure there was here some sort of bullish divergence. It was not here, okay? That gives you a trigger, a further interest to work and to trade and to execute in that level of interest. Fourth component is a way, your trading system should give you a way to determine entry, invalidation, and taking profit. That is, let's say, the foundation of the trading execution. So here, this again, complex topic, but the trading system should tell you why and when you want to enter. It can be again the level, the bias, the market dynamics, should give you an invalidation point always before entering, and should give you some logic to trade. can be liquidity. Again, there was a liquidity grab. I want to enter in this level because it's a level of interest. I place my stop loss below the last week because it was the liquidity grab, and my taking profit level are next liquidity level. It can be demand and supply, you can support a resistance, can be market structure to keep it very simple, and can be million other things, but should be an objective way, a reportable way to select, always in a standardized fashion, entry level, invalidation, and taking profit. So this, let's say, is the super basic of the trading system. But many times people start from I want to understand how to choose entry, invalidation, and taking profit. But if you are not able to form a bias, select level of interest, and understand simple market dynamics concept, I am sure your entry, your invalidation, your 2P will not be logical, not be objective, and most probably will not even be profitable. The fifth concept chapter of the trading system should give you an objective way to decide when to trade and when not to trade. This is again concept a little bit tough, but it can be that you do not trade when there is economic events, you do not trade at mid-range because it's choppy, you do not trade too far from fib level because you don't get a proper risk reward. So if we are monitoring, to give you an example, if we are monitoring this leg here in Bitcoin, we don't want to trade or too long before certain level, because we know that the risk reward here would simply suck, because our trade above this level would suck. I'm not telling you that this is what you have to do, but I'm telling you these are examples of when and when not to trade. For me, for example, I avoid trading in a range at mid-range. I only try to rate as much as possible to control myself, and in a range I only try to trade at the top of the range or at the bottom of the range. I try not to trade in the mid-range. In a trend I always try to short at a favorable Fibonacci retracement level, and I try to long at a favorable Fibonacci retracement level. I try, and sometimes I become a degenerate, I do, but I know I should not do it, not to trade on weekends, not to trade during holiday, because I know my win rate in that moment is sucking. You can also say I don't trade in high liquidation moment. I don't try to trade when there is too much volatility and whatever. But the system should tell you when your system should be applied and when your system should not be applied, because you might have a perfect system, but if you apply this system in the wrong place in the chart and in the wrong moment in the history, in the week, in the day, or whatever, in the hour, your system will fail. So you have to know and to develop. If you don't know, slowly you have to build consciousness on when to apply and not to apply your system, when to trade and when not to trade. Next, very important, is your trading system should have a very strong foundation of risk management. So your system should tell you what should be your risk exposure, what to do, how you manage your trade, how you manage your stop loss, how you manage your taking profit, to ensure that you are always applying a very sound, logical, objective risk management on all your trades. So you should never lower your guard. You should always have a very sound risk management system that whatever the market does, you will not be hurt too much. Again, you will find a video on risk management, but again, this should be in the rules of your trading system. Last but not least, your trading system should be all the topic that we cover until now, all the chapter that we cover until now should be developed in a way that everything should be reportable. So your trading system should be able to be journaled. So all the topic we covered before, they have to be developed and described and defined in a way that you can put them in an Excel file and you can put them in your journal. So you will be able, with the time, to create a data set that will tell you, according to the development of your bias, according to the level of interest, according to the market dynamics, according to the moment, not moment you trade, if the system is working, when is working more, when is working less, when you have decided to derogate, to make exception for your system, what happened? It went well, it went bad, and so on. So it should be all logics, all concept, all parameters that are easy and simple, objective, to be written down in a reporting and journaling system. So it should not be vague, should not be my gut feeling or the guy on Twitter told me to do so. Should be objective way that you can write down on your journal. So if you develop this trading system, make sure to take the trade with me on Bluefin. As you can see, it's a very cool exchange. Is non-KYC, so it's very simple to register just with an email address. It has a tons of liquidity. The interface is basically the same as Bybit. You will enjoy a 20% discount on trading fees using my referral link, and you will be eligible to participate in the many campaigns we run with the team. We are currently, for example, running a campaign where you can win a brand new iPhone 17. So do not waste further time, just click on the referral link and trade with me on Bluefin. So time for some conclusion. So you can create your checklist on the trading system. A trading system is the package of rules, logic, parameters, concept that will allow you to follow from A to Z a trading career. It can be super complex, it can be super simple, but in my opinion should cover all these chapters that we have been explaining in this video. So the first is a trading system should allow you to read and objectively define the context of the price action. Translating in should be able to give you a bias and should also be able to tell you when to change your bias, adapt your bias, and have a new bias. The second part of a trading system should give you an objective, systematic way to define level of interest, support and resistance, demand and supply, or market structure, or whatever else you want to use to define the level of interest. Because with the level of interest, you will know where you are interested, at least interested to do business, and when you are absolutely not interested to do any sort of business. Third part of the trading system is to have an basic understanding of some sort of market dynamics that will allow you to decide if to do business at that level of interest with a certain bias and to click the button, trigger the trade, start to do business. Can be momentum indicator, can be low time frame price action, can be liquidity heat map, can be thousands of different things. Again, the point of this video is not to tell you how to make it, but is what you have to put in your trading system. So I have a logic of market dynamics that will allow you to execute or not execute trade. Fourth part of the trading system is the trading system should be giving you objective way to place your entry, your stop loss, and your taking profit, and how to adapt on also the management of a trade once you open the trade and you have already money in the table. Should never be gut feelings, should be technical and objective way that tell you close this trade or keep this trade open, take early TP or close for a loss before a full stop loss. So the system should give you entry, invalidation, and taking profit. Your trading system also should tell you when apply the system itself and when not to apply the system itself. So when to trade and when not to trade. Not to trade in weekend, not to trade in the middle of the range, not trade too far away from Fibonacci level, not trade when the volume is too low or the volume is too high, when open interest is that or funding rate is this. So it should give you rules, you have to find them. I told you what are mine, that allow you to decide objectively and to do it constantly when to apply your system and when not to apply your system. Almost the last one, the trading system should be based, this is a very core principle, founding principle of the trading system, should give a risk management toolbox that will tell you what is your total risk, what is your specific risk for each trade, how you manage risk proportionally, if you want to have a static or a dynamics trading system, a risk management system, but whatever should give you very strong rules on how to apply risk, not to jeopardize your portfolio, and to make sure you protect your capital. Last, everything on the trading system should be journaled and should be reported in a data set of information that will allow you with the time to judge the system itself and all its components. So all the components of the trading system need to be objective and simple to write in an Excel file, and should be simple to do it constantly. So at the end you will have a journal that is easy to read, is ready to review, is ready to interpret what I did wrong, did I follow my system or not, why I didn't follow, what I did as a mistake. But what you write of all these, how I form your bias, how I map a level of interest, how is my market dynamics, how is my entry, my invalidation, did I trade when I supposed to trade, or did I trade it in weekend. So everything should go simply in the journal, so you will be able at the end to review, to adapt, to improve, to change what is not working, and to continue to do what is working. So I hope was helpful. I think this is a very, very important concept in your trading journey. Again, not here to create clone of my system, but to help you, to give you a logic on how to develop your own trading system. This is not something that can be done in 24 hours. This is not something that can be done in overnight. The video is short, but believe me, it takes very long time to create a trading system, and you will never finish to create it. You will always change it. But you have to know that these are the main concept, chapter, topic that you have to consider when you develop your trading system. So I really hope you enjoyed this video. It was helpful. If it was, make sure to comment, like and subscribe to the channel, and we'll see you in the next one. Take care. Bye.